Hello there, welcome to this edition of Global Business Africa. On the 8th of October, we've got the usual lineup of all the top business news stories you need to know about from Africa and elsewhere across the world. From Nairobi, Joburg, Lagos and Cairo, we've got you covered. Here's what's coming. The World Bank examines the rising costs of dealing with Ebola outbreak as a result of underinvestment in health. Lonmin is back to full production much earlier than expected. We'll be asking why. And we'll be looking at a company whose business it is to get Zimbabweans way out of car trouble next. Let's start tonight with news from outside Africa, however. The International Monetary Fund said in a report released on the 8th of October that banks in many of the world's advanced economies are not strong enough to sustain a global economic recovery. The fund examined 300 banks in advanced economies and it found that many were not healthy enough to supply the credit needed to advance the recovery. The IMF is recommending that banks ought to merge and consolidate in order to provide better synergy and have more credit available for lending.
The not so good news is that, as the report finds, many banks do not yet have the financial muscle to provide enough credit to vigorously support the economic recovery. And what it means is that after having gone through the stage of stabilizing the banking system and then repairing balance sheets, banks now face a new challenge. And that is of adapting the business models to the post-crisis economic and market realities and also to the new regulatory environment. At the same time, risks are shifting to the shadow banking in the form of rising market and liquidity risks, and if left unaddressed, these risks could compromise stability going forward.
Now, Ebola could inflict well over $30 billion worth of economic damage in West Africa alone by the end of next year if this outbreak is not contained. That's one of the grim forecasts by the World Bank in a new report out today in which it examines the potential impact of the hemorrhagic fever spreading beyond the worst-hit countries of Guinea, Liberia and Sierra Leone. The report has two scenarios. In one, if the disease is contained soon, the economic impact could top out at about $9 billion or so. In the second, however, if the disease spreads and the response is slow, the total cost to West African economies could be well over $30.2 billion. The World Bank President Jim Yong Kim appealed to the international community to remove the logistical roadblocks plaguing Liberia, Guinea and Sierra Leone and to bring in more doctors and trained medical staff to help stop the epidemic. He added that the enormous economic cost of the current outbreak to the affected countries could have been avoided by prudent investment in healthcare. Now, South African Airways and its subsidiary South African Express are once again coming to the South African taxpayer begging the state to underwrite a guarantee for more funds to keep them flying. Both companies have repeatedly forked out the begging bowl over to South African taxpayers to prop up their operations in the face of growing regional and international competition. Angelo Coppola has more.
The first signs of more trouble within SAA and SA Express emerged when they failed to file their annual financial results to Parliament before the 30 September deadline. Lynn Brown, the Minister of Public Enterprises, then issued a statement that she was in discussions with Finance Minister Nene about another bailout.
Future bailouts, and there have been bailouts to the tune of between 15 and 20 billion rand in recent years, have to be informed by the economic context. And if you look around South Africa's economy at the moment, growth this year will come in at just over 1%. The current account and budget deficits are widening. Our revenue is going to undershoot estimates by a significant extent, and we're simply no longer in a position where we can afford luxuries such as a national flag carrier.
Basically, they run a loss-making business and they keep on expanding the loss-making business. So the only way is to contract it, and that will reduce the losses. There's no other way.
There are rumblings from within government that the tide may be turning. Minister Brown has said as much when she mentioned that a task team had been looking at the state's role in SAA.
The view is starting to take hold that it might be time to dispose of the state's business interests And SAA, which has been a drag on the fiscus, might be one of the first that has to go.
But it's not simply a case of putting the flag carrier on the market and hoping someone will buy it. There are two options. Either it can be placed in business rescue and business experts can be brought in to fix the business, or there's privatization.
Well, privatisation has always a role, but I think in the present financial condition, nobody would be interested. So it's best to actually reduce the scale of operations to a manageable operation and then try and privatise it.
This isn't the first time that the national carrier hasn't delivered its annual financial results on time. And if it remains state-owned, it probably won't be the last. But there are signs that the state may be reviewing its position and ownership of the entity. And if that happens, it means that it can then divert funds into other priority sectors within the economy. I'm Angelo Coppola for CCTV in Johannesburg.
Now, we're still in South Africa, and it seems that Lonmin is back on its feet. The country's third biggest platinum miner has returned to full production much earlier than forecast after a 5-month strike in the first half of the year. According to a statement it put out today, it exceeded output levels in both August and September compared to the same months in 2013. Now, along with the rest of South Africa's platinum industry, Lonmin has been plagued by persistent labour unrest, low prices for the platinum output and rising costs. AMCU's first half strike, however, was the longest and most costly on record. That cost the company about 348,000 ounces of platinum in lost output. Lonmin says it has achieved steady state production in normal levels, adding that employees had returned to work in greater numbers and much faster than expected. To get some more details on that particular story from Angelo Coppola, he's live in Johannesburg right now with more details on this. Angelo, what's the production status of the other top two producers, Amplats and Implats? Are they also back to full production?
Well, last year the South African platinum miners, those top three, produced around 71% of the 5 million ounces produced worldwide. And Amplats was responsible for around 40% of that production. So it's actually not a bad news story here. Last month, Amplats said that they'd reached 94% of their expected production levels at the mines that were on strike for those 5 months. They do expect to be at full steady state production in the fourth quarter of 2014, which is around about now. In terms of Implats, well, when we last heard, they'd planned to be at full steady state by the end of October. That's probably not going to happen because it's been delayed, as there were 4 deaths at the Rustenburg mine in September, and production there was halted for some 2 days. Raman?
Indeed. Let's focus on what the mining minister said earlier today. He asked mining companies to take the government into, and I'm quoting him here, full confidence in any restructuring plans. Now, given how the government handled the platinum strike in the first half of the year, do mining firms really have any confidence in the government as an impartial arbitrator?
Well, Raman, the perception is that the platinum miners are keen to work with government, but not at the expense of their shareholders. And if we wanted proof, we could have a look at the aborted move by Amplats to try and split those and spin those businesses off recently. And that was kind of, there was a U-turn done there by management. The fact that Amplats also continues with its drive to sell off those old assets is further proof of the fact that there are corporate considerations here. Management and shareholders don't want or don't seem to have the appetite for a labour fight, especially not at the current depressed prices that we're going through. And today, at the same event that the minister was at, Mark Kutufani was saying that there wouldn't be a mining sector in South Africa if the industry didn't modernise and mechanise to a certain extent. And this kind of goes against what's happening in the mining sector and what the mining minister wants. The government wants job creation at any cost. So it's about the numbers for government and not about the quality or the skill level. Rama?
Indeed. Finally, Angelo, given the rise in the strength of the American dollar, especially over the last couple of months, expectations, of course, of a rate hike driving that in part, and we're also seeing weaker commodity demand in China and elsewhere. What's the fiscal outlook here for South Africa's top 3 platinum miners for the rest of the year?
Well, we'll drill down into a bit of the detail here. The global platinum market is expected to remain in deficit for this year. Analysts are also suggesting that that price might be under pressure because speculators are taking more and more short positions on the platinum price. In other words, betting that that price is going to come down. Amplats, if we get into the detail now, has revised its sales forecast down to between 2 and 2.1 million ounces of production that they're planning to do. Implats has seen its bond yields at record levels, and this is the mines working towards those pre-strike level production levels. And Implats have said recently that they'll probably need around $250 million until November to get to those levels. Analysts expect that they'll probably then have to go back to the market early in 2015 for more cash. Lonmin will be updating us on their situation in about a month's time, but overall the platinum miners here are still struggling. Raman?
Still struggling indeed. We'll have to leave it there. That's Angelo Coppola live in Johannesburg, South Africa. We'll be looking at the effect of today's news from Lonmin on its share price a little later. But first, let's make a quick stop in Uganda. It's launched the construction of a new railway system. This is part of a fairly seamless transport system planned to connect East African countries. The project has an $8 billion price tag, and it will be constructed in partnership between the Ugandan Army and the China Harbour Engineering Company. Construction is expected to start in 6 months. The launch of this program was witnessed by Presidents Yoweri Museveni of Uganda, Paul Kagame of Rwanda, Salva Kiir of South Sudan and several other delegates. Uganda's railway system is in a fairly poor state, and a new rail line is expected to cut freight transport time by over 90% once it's complete. Other East African member states will also construct a section in their countries. Kenya has already started construction of a standard gauge rail line. Rwanda and South Sudan, however, are yet to start work on theirs. Kenya's main electricity generator, KenGen, plans to team up with private investors to build geothermal power plants that may come online by 2016. Now, this is part of Kenya's wider plan to expand generation capacity by 5 gigawatts by 2017. KenGen currently owns and runs the bulk of Kenya's installed generation capacity of about 1.67 gigawatts, and the East African nation has been trying to tackle power shortages and high prices. By 2030, energy planners here estimate that Kenya will need about 15 gigawatts in extra generation capacity. Most of that will come from geothermal and other renewables, which have a lower unit cost than widely used diesel generators now, and they're not as vulnerable as dams are to weather. KenGen CEO Albert Mugo said the company had already drilled 45 out of a targeted 80 geothermal wells. They expected to produce an extra 400 megawatts of capacity by 2016 at a cost of about $1.7 billion.
We are also looking at being able to do joint ventures for some of the projects that we'll be doing, which will require for us then to partner with some private companies who can help us in mobilizing the debt for the project and also inject a substantial amount of equity, and then we do these projects together. So what we expect to see in the coming month, particularly now that a third unit is already on the grid, is a further reduction, and I would not be surprised if by next month we'll be going to below 4 shillings per kilowatt hour on fuel. So that's the kind of effect we are seeing on the tariff as we bring in the geothermal units.
Let's revisit something we covered a little earlier in the bulletin. The World Bank releasing a fairly chilling report earlier today, estimating that the economic cost of the Ebola outbreak could be as high as $32 billion by the end of 2015 if nothing is done now to jump on this outbreak and stop it dead in its tracks. Daniel Rangis has been keeping a close eye on developments at the IMF and the World Bank annual meetings. Is live in Washington, D.C. for us right now. Daniel, the World Bank's report and the potential damage for Ebola here, what reactions did it evoke at these annual meetings?
Rama, as you know, some people out there who are probably listening or watching now will be saying to themselves, why are they talking about the economic impacts of the Ebola crisis when so many people currently need healthcare, currently need these isolation wards, and the troubles are imminent? Well, I'll tell you for why. The economic impacts are integral to the humanitarian concerns here. And that's what the people of Washington, the international community that's flocked here for the IMF World Banks, are now looking at. If you have precipitous economic loss as a result of this Ebola crisis, you will have more people in dire poverty. The price of food we've already seen has skyrocketed in these countries. And so you have this situation where there's a complete lack of access to basic healthcare, to basic education, and to economic opportunity, as well as people having no ability to go to school to create the opportunities for the future. And what's clear, they've laid out two different scenarios. One, a quick recovery of this Ebola crisis and then a long recovery of this Ebola crisis? Well, already most epidemiologists are saying that this will trickle into 2015 when the situation becomes a lot worse. And as it does so, if it does so, then the economic costs will only grow and grow precipitously. And that has direct impacts on the humanitarian crisis for the people of West Africa.
Indeed. The World Bank president also argued that it's important to get past logistical roadblocks which are hampering the delivery of aid and health personnel. Now, short of convincing airlines to start flying again, who can realistically fill this logistics gap between now and when airlines are confident enough to start flying again to West Africa?
Fairly recently, Rama, the US Congress, Republicans and Democrats came together and agreed that they would take $1 billion from their military budget, which was used to fight in Iraq and Afghanistan, and put it in an Ebola fund. Now, we are starting to see the results of that commitment. They have now started to set up a logistics hub in Senegal, where they plan to bring in C-17 aircraft, which are very large cargo aircraft. And then from there, they will distribute the materials and the personnel and send them off to different sub-hubs within the West African community and within the crisis. They will be C-130 Hercules aircraft capable of landing in very rough fields. So they want to get this up and running as soon as they can. Logistics is a major part of that. They hope to bring in as many personnel as well to help in the training of local people in the Ebola-affected region. So a lot is being done by the United States, but I expect more calls from the international community to increase that effort.
Indeed, certainly sounds like the Berlin airlift all over again. Thank you for that. That's Daniel Rangers live in Washington, D.C. He'll be keeping tabs on the IMF and the World Bank's annual meetings in Washington. Quick run through the markets here for you. The JSE Top 40 down about 1.5% in trading today, but cumulatively since the start of July, it's down about 9% so far. Lonmin, however, having a relatively positive day. Its shares are up 1.8%, about 31.55 Rand after news that production is finally back up to speed. ATMs might be common elsewhere, but Mogadishu has finally got its first. We'll have the details and be looking at the impact cheap salt from Egypt is having on Lebanese producers. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
African leaders have been urged to make it easier to move and do business across borders within the African continent.
Africans should be free to move in their continent, to do business, to interact, if we are to grow the levels of investment and trade that will ensure that we are able to create the jobs for our people that we require.
Welcome back. You're still watching Global Business Africa. Now, Somalia has gotten its very first automated teller machine. Fairly common affair for the rest of us around the world. But consider this. For a country that's been plagued by insecurity and riven by civil strife over 2 decades, this is just one more indicator of a return to normal conflict-free operations. The ATM has been installed in the capital, Mogadishu. It allows anyone with a Visa, MasterCard or American Express card to withdraw money from international bank accounts. Now, previously, if you traveled to Mogadishu, you had to bring enormous sums of cash with you, or you'd had to get it through the Hawala system. But with this ATM, things have just become a lot easier for everyone.
ATMs facilitate customers to get money when they want. Before, one would have to wait until morning when the bank was opened. But now, you can go to an ATM at any time and get the money you want from your account.
Now, one of the oldest sites for salt mining in northern Lebanon is on the brink of extinction, at least in the business sense. Locals there blame that on the reliance of imports from cheaper Egyptian alternatives. Here's Peter Akaba with more.
Salt mining has existed for centuries in the northern Lebanese city of Anfe, and generations have grown up making their living from it. But today the ancient trade is facing the threat of extinction, and some of the remaining sites on the Mediterranean coast are little more than tourist attractions.
Through history, humans discovered salt. They did not invent it. In nature, especially in the rocky shores like Anfez, the sea waves filled gaps between rocks on the coast, and humans noticed that water was evaporating from it, and a white material, which is salt, remained. He tasted it, liked it, and found its use. He started to imitate it and bring himself water from the sea and fill it. And this is how the mining of salt started to evolve.
Anfe is not the only Lebanese town where salt mining has fallen into decline. The president of Anfe Heritage, Rachid Dabul, told Reuters the country's entire salt industry is under threat thanks to the government's decision to scrap taxes on Egyptian salt imports, which at a stroke undercut locally mined salt.
Salt is going through major problems, and the problems go way back, and we surely can't solve them soon. One of the major problems salt is going through is that the government cancelled the tax on Egyptian salt in the 90s and allowed it to be cheaper than local salt, so consumers prefer to buy Egyptian salt over local salt.
John Issa has been a salt miner all his working life. Now in his 70s, he is worried about the future of Lebanese salt mining. He said economics forced him to switch to grinding cheaper Egyptian salt, but the decision left a sour taste in his mouth.
All these people tried to quit because they were not producing anymore. One cannot feed his family anymore. We started working with Egyptian salt. It grinds. You get it from Egypt. A truck throws it. You install a mill and you grind. You can work, you can sell and profit. Salt mining sites started to decrease until we reached today. In these times, there are no salt mining sites, only a few.
He fears for the future of the ancient industry. Like him, many from Issa's generation believed it was futile to pass on the skills of a dying trade to their children. Peter Akaba, CCTV.
Now, Africa's richest woman, according to Forbes, the Angolan national Isabel dos Santos, is seeking to spread her banking firm into Namibia after banking license was approved by that country's central bank. The Bank of Namibia granted provisional authorization to Bank BIC Namibia Limited to conduct business as a banking institution. Bank BIC Namibia is a subsidiary of Angolan bank Banco BIC, in which the daughter of the Angolan president, José Eduardo dos Santos, has a 42.5% stake. According to Forbes, Isabella dos Santos is reportedly worth $3 billion. Now, with regard to commodity prices, the main narrative that we're keeping a very close eye on here really is on oil prices. We'll be looking at the impact on this on the Naira a little later, but with respect to Nigerian crude, moving fairly slowly. By Monday, 40 of the 63 cargoes on offer had still not been sold, and these, remember, are for November. Combination of ample supply and low prices are simply telling anyone who's coming to the market you've got a variety of options, and sellers are simply getting hammered. When we come back, we'll be looking at a company in Zimbabwe whose business it is to get any car owner way out of trouble. Welcome back. Now, at some point or other, your car could and will inevitably break down. If you happen to be in Zimbabwe and you're lucky, it could happen in an urban area, and getting help over there is not that difficult. Sometimes, however, it's right in the middle of nowhere, and that leaves you more or less totally helpless. Now, however, there's a company that's cashing in on that need, albeit against a fairly difficult operating environment. Here's CCTV's Farai Makutuya with a story that makes our grassroots segment tonight.
The growing number of vehicles on Zimbabwe's roads, cause of peak hour irritation for many, presented a golden opportunity for one young entrepreneur.
Our mandate, basically, we always say, is to provide peace of mind to all road users in this country. So as you travel, you're relaxed. You know that if at all I'm to have a breakdown, I'm to run out of fuel, I'm to need a tire change, I'm to need a jump start, I've had an accident, I can call somebody. We officially launched on the 3rd of June 2010. That's when we started this company with about 7 employees, if I remember. And we've now grown to 35. We've now grown to 8 branches across the country. By the end of this year, we'll have 9. Our aim is to have 18 centers across the country. That way, we've mapped out the country that with 18 centers, we can be at any place, at any time, in less than 30 minutes. It is a difficult market, but I think it's all about how you look at it. It's all about your mindset. If it were easy, then everybody would be doing it. So we actually want the market to be difficult so that it separates the men from the boys. We've basically survived because we've tried to respond to what the market says. So we listen to what the market says, and what they say is what we do. We continue to innovate, we continue to do things differently, we continue to introduce new products, we continue to try and keep the market excited. But at the top of it all, we try and deliver exceptional customer service. I'm not saying we're the best, I'm not saying we do it perfectly, but we try our best.
Among the innovations are mobile apps the company has developed that calculate distances, provide emergency numbers and information on traffic fines. All handy tips for travelers. So, where next will this journey lead?
I've been to Zambia. I've seen the roadside assistance there. It's not as developed as ours. One of our immediate aim is we want to be in Zambia. We want to be in Southern Africa.
Some say the future is bright, but here, the future is orange. Fare Mwakutuya, CCTV, Harare, Zimbabwe.
Quick run through the currencies here for you. One particular point in focus, the Naira. It's at a 7-month low despite central bank intervention at about 164.50 to the greenback. The majority of this is directly attributable to a lower oil price, plain and simple. Now, on Global Business tomorrow, we'll be looking at strategies towards inclusive growth as developed from the World Bank's annual meetings in Washington. Daniel Rangers will be keeping a close eye on developments over there for us. We'll also be looking at the new person in charge of the South Africa Black Empowerment Forum. Should be a fairly interesting personal story, this. But that's it for this edition of Global Business. Do remember to send your feedback to globalbusinessafrica@cctv.com, wherever you are online, Facebook and Twitter. So you can stay in touch with us over there. Thank you for watching. I'm Raman Yan.